Abhay Agarwal also joins us on the show. Abhay, hi, good to be speaking with you. What spooked the markets today, you believe, or this is just par for the course and we are headed ultimately for that 26,000 level soon?
Yeah, hi, good afternoon. Thank you for having me. No, I think I'm not reading too much into this weakness over the last couple of days and today. I think this will continue till the budget announcement. It is a big event, very close. We are very close to it. So I think traders are probably lightweighting their long positions, booking profits. And you have to also remember that a lot of money has been made over the last 6 months, especially after the poll results came out on June 4th. Market has seen a one-way rally. So I'm not surprised that people are booking profits, people are taking some money off the table. I think the general view is let's see what comes in the budget and take our sectoral positions accordingly. And at the same time, there have been global weakness in commodity prices. Were firming up nicely, but we are seeing some sell-off there. So the metal stocks are under pressure, as you were just mentioning. So I think other than that, I'm not reading too much into it. I don't think the market is setting up for a big correction or any such thing. The probability that the market will hit 25,000 not too far distant future is higher than it going into a downward correction.
So that clears the air for us. Probability of 25,000 is higher than perhaps a sell-off. That's the clear conviction coming in from Abhay. But Abhay, if you had to put fresh money to work, where would you put it? Would it be the underperformers, your FMCG, let's say IT and financials for that matter? Or is it going to be more of the same, be with the momentum, power financiers, defense, PSUs?
Yeah, I think what we like to do is to stay with valuation comfort. And what happens in markets like these is very difficult to analyze momentum because, of course, there are segments of the market that are in a frothy zone, stocks that have gone up 10 times sectorally, all stocks in the sector like railways, defense, 5 times, 10 times power. So difficult to stay with the momentum. I mean, it's a very risky bet. We like to explore sectors that have not done well, not on investors' radar for the time being because of the disappointments that investors have had because of sideways correction for 3, 4, 5 years. And I think what stands out for us, and where we're seeing green shoots in recovery, are spaces like agrochem, insurance, even FMCG. With this the monsoon finally picking up and government focus on rural spending, rural economy, there will be a pickup, in volumes for the large FMCG players that have struggled. So I think these are the pockets that we're seeing as opportunity. IT and financial services not yet looking very attractive to us. I think the valuations are still elevated despite the sideways correction for the low growth that these companies, the zone that they are in right now.
Okay, fair enough. But what about some of those, ancillary sectors, chemicals, agrochemicals, for instance, textiles, sugar, and all of these spaces? Are you looking at any of these verticals actively?
We are very positive on the agrochem space, and this is a space that has gone through 5 years of pain, literally, and the last year was just phenomenal. It was like once in a last 40-year situation where Chinese dumping across the board, across products, resulted in end product prices falling, almost 60%, 70% in some cases. And as a result of which, even the most efficient agrochem manufacturers had to take very sharp write-offs on the inventory that they hold and also sell at discounted prices. But now that market is coming back globally, and in India also we are seeing good green shoots there. So agrochem, in terms of crop protection, crop yield enhancement, is a space that we would want to stay close to because we also see a government focus on increasing crop yield now, not only just give more money to farmers by increasing the MSP, but help the farmers increase the yield per hectare. So I think agrochem fits right in there. I'm expecting in the budget also some SOPs on agrochem input prices on the GST side. I think GST is still elevated on some of these products, including fertilizers. So I think that is a space that we definitely like. Chemicals, we still want to see some more strengthening of prices before we jump into that space.
Okay, point taken. Agrochemicals, still you're quite positive. Abhay, you've been quite positive about the battery space as well, right? Amara as well as Excite, etc. Tell me your view there. Do you still see some comfort in terms of people who had missed the first leg of the rally? Does it warrant a fresh buy, you believe?
I think anybody who's buying into battery stocks has to take a 5 year view and say that, look, where is the volume for these companies right now and what it would be 5 years out. And I think only then you can take a call, because looking at just the near time valuation may prove to be a red herring. What has triggered these stocks over the last 6 months, when you see some, both the leaders have doubled or maybe more in terms of market price, is the announcements around electric vehicle space, around the fact that Amara Raja, for instance, is setting up a gigafactory in Telangana, plus the recycling business that they are in. And lead acid battery is a business that is an evergreen business, as the number of automobiles continues to grow in this country. Both new vehicles and used vehicles need batteries. And it's a highly consolidated industry with only two players. So as the battery storage needs of the country increase, and Amara has a unique position because it does about 15% of its revenues come from B2B segment, which is large storage batteries for data centers and consumers of power that require battery storage. So I think these are good long-term secular plays in a highly consolidated industry where you will grow year on year and improve margins as you go along. So we are very fairly bullish on this space. I think this is a space that is very critical for GDP growth.
GDP growth, but Reliance is critical for the market. Reliance comes out with earnings today, Abhay, and I know you have been tracking this stock for a long time. Tell me if you have any key expectation or something specific that you're watching out for.
Yeah, I'm very keenly watching out for two spaces. One, if there is a commentary around Geo Telecom, because the impact of the recent ARPU increase. And I would also like to understand what is the view on the ARPU growth over the next 2 or 3 years, because I think finally this company is using that as a lever to increase its profitability, increase its margins, and which is what we expected, but now it's finally coming into play. So I think that will be a big driver for Reliance's market cap. The second thing, of course, is what is the capex plan around the retail business and how do they see that growing. And lastly, the O2C business, I think it's more of a commodity business, very efficient producers, but we would like to see what are the GRMs currently and what they are forecasting. And lastly, of course, all analysts always look at what is the gross and net debt position of Reliance. Is it getting, is it increasing or is it decreasing? So those are the few things that we will look out for in Reliance results.
Interesting. Thanks so much, Abhay, for making time and speaking with us today. Appreciate you joining us.
If you like this video, then like, share and subscribe to ET Now.